Oh, welcome everybody. I'm Sam. This is the live stream. We're going to take a look at a bunch of stuff today. I want to look at a few reports that have come out. I want to take a look at a bunch of stuff, actually. A couple of websites that I've been looking at. So let's look at Twitter. If you're not following me already, make sure to come to Twitter. My name is Traders Insight. That's me right there. Come and check out my tweets. They're very important. Anyways, what did I tweet about today? Right. So tomorrow I am hosting an online conference called the Web3 by the Web3Journal. Let's check out the website. It is the first online web conference discussing the most important things in the future of blockchain investing. Tomorrow, I'm the host. 15 hours ago. I need to get my picture on here. But I am there. So I will be hosting every single panel as we go through. There are 6 panels each day. And the panels start at 10 a.m. Pacific Standard Time. Got a great group of people. You can follow us online at twitter.com/web3journal. Follow them, right? So Web3Journal is actually run by Andrew Lee, who is a good friend of mine, and he's putting together all of this. Doing some very cool stuff. Andrew puts out a newsletter for Web3Journal. And we're putting together the first web conference. It's really nice to be the host of this. I'm looking forward to it. I've got everything set up and ready to go. So tune in tomorrow for me hosting. We'll be running through with a lot of people. Hopefully it comes off well. And yeah, other than that, yesterday, I thought this was really good. Woke Economics thread. Globalism is a result of a collaborative corporate strategy to reduce international trade barriers and corporate taxes. Exactly. They want to reduce corporate taxes, reduce the restrictions on moving goods, on moving people, on moving everything, so that you can take advantage of different, you can use comparative advantage in different countries, different cities, and different regions. Open borders is a strategy to drive down low-scale labor wages. 100%. You know, why pay someone in New York when you could have someone do it in Russia for a fifth of the price? H-1B visas are a strategy to drive down high-skilled labor wages. Exactly. Bring in someone from India or Malaysia or somewhere where there's a lot of very overeducated people who can't find jobs. Bring them to the United States and give them jobs, and you can give them for a lot less because you brought them in on H-1B visas. Government subsidies and contracts are successful lobbying attempts to seize taxpayer money. Well, I agree with that. Citing climate change is a strategy to secure subsidies. That is 100% true. Anybody that mentions climate change, when you ask them, well, what do we do about it? It's going to be one of two things. Either it's taxing and regulating existing fossil fuel industries to higher prices so that it's not actually so profitable or even affordable to use these fossil fuels. At the same time, it's providing subsidies to tech companies and to other green industry companies that are working to provide electric vehicles, solar, wind, geothermal, and to build these type of energy sources. Now, the issue is that it's extremely less expensive to use oil than it is solar and wind at the current moment. And so the only way that these companies can compete is through subsidies from the government, which is what climate change is all about. It's always political. In the West, nearly the entire global recovery has been financed by federal deficit expansion via the Fed and ECB. Well, I disagree with that one a little bit. I don't want to get into that too much, but I think that the recovery has been probably tampered and reduced actually by the deficit expansion. But I don't want to say it's been entirely as a result of the deficit expansion. Corporate boards, FDA, medical insurance, Obamacare. That's true about Obamacare. Government regulations. Here we go. Government regulations are written and sponsored by corporations within the industry to raise barriers to entry to limit potential competition. And we're seeing this right now happen 100% in the crypto space. Coinbase, Gemini. I just saw Winklevoss. Let's see if I can find this. Winklevoss Twins. Winklevoss Twins news. Here we go. First thing. Here's an established corporation, which is Gemini. Oh my god. Let's see data rules. I'm gonna have to switch my VPN. Established corporations advocating for regulations that their company meets to put up barriers against other companies from entering the space. Okay. Here's what they said. The idea is that companies that build on top of things like Bitcoin should have regulation that's thoughtful, that doesn't stifle innovation, said Tyler on Balancing the Ledger. People believe in the dream of crypto. They just don't know how to engage with it without getting burned. We are here to say Gemini's a place you can do that. You know, it's... I don't want to get too much into it, but the Winklevoss twins are all for what New York has been doing with its digital currency license. I don't know. You see these established companies, once they start making money, like Gemini, like Coinbase, they come in and they want to establish regulations to create a moat around them. They use the government to create more paperwork, require more lawyers, so that startups and other people in the space can't actually come in and create new businesses. Time-honored strategy. Nationalist movements are a response to the failed economic promise of globalism. It's true. Secondary and tertiary referendums occur when businesses cannot convince the public of their preferred economic conditions. Never forget Greece. That is also true. Look at, corporations use the right to enact favorable tax policy and left to pass regulations to increase barriers to entry. Repeat process for decades. And 100%. You see, the Democrats are pushing for, left is pushing for greater regulation, but at the same time, lower taxes through the right. Modern trade agreements exist to limit trade, 100%. Marketers use the metaphysical shaped whole modern lies previously produced religion to sell you products with a cause. Now, we saw this with Gillette the other day, right? They have a cause, but they don't really care about the cause. I mean, maybe they do. They spend $1 million on it. But at the end of the day, they, I think that corporations can be run for the right reasons, but the entities themselves, the corporations, are just a legal shell. It's an amoral structure. It exists to increase its share price for its shareholders, and that's all it is. So when you see this virtue signaling happening through the corporations, be very wary of it, because they are spending millions of dollars on, well, maybe not millions, maybe hundreds of thousands of dollars to fund marketing campaigns run through big marketing agencies to come up with these ideas. They spend a lot of time and effort figuring out how they can find the right message that will get people talking about their products, and so they can sell more things. Same thing for Gillette. Gillette wanted to have a very polarizing message, and they got it. And it's great for them, right? Because it goes down the line of that no news is good, bad, right? No news is bad news. Like, if people are talking about you, then you win. And if they're not talking about you, then nobody really cares about you, and nobody's going to buy your products. So it helps be polarizing. And we've seen that with Trump as well too. Trump is very polarizing. Everybody talks about him quite a lot. Gets him in front of the newspapers every day. That's actually how he actually won. Is he was so polarizing that the newspapers couldn't, well, the newspapers, TV, everybody could not stop speaking about him, and he was the only person on TV all the time. Anytime he had a news conference, the news channels would put him on because it was good for ratings. Even though the other competitors, may have been better, they just didn't pull in the ratings, which is the only thing the modern news channels care about today. Increasing ratings, which increases the advertising space, which then increases the amount of money that they make. They just have to figure out how to sell you to get you to watch the news, how to get you to watch the news longer, and how to get more people to get there. All right, let's move to the markets. We're going to go check out Bitcoin quickly. Just Bitcoin and Ethereum today. I don't want to check out too much. Interesting. I don't really like that. I was thinking about a long position earlier, but this doesn't look that great. So this looks like we're about to head down. I'm just going to draw this down. It's for the trend line from before, which would be in this like 114 area. However, where are we right now? We're right here. There's no, well, it's kind of a sticky area. Let me take a look at the volume profile. All right. Yeah, I don't know. I mean, 116 would be the bottom of this value area. There's been a lot of volume up here actually today, which is a good sign. Or kind of in this area. Let's turn on volume as well too to see how things have been. Yeah, there's a lot of volume actually coming up through here. That is a very good sign. The only bad thing is that you have a very kind of straight tapering off, which means that there was a lot of sells coming in at the top in this 119 level. It wasn't able to break through, and you can see that it tested it multiple times, which means that there was somebody up here either taking profits or starting to short into the market. It's hard to say, but it looks like that position has been filled, or at least the demand has been filled, and there's no more bids up here, so we come back down. So we will see if we come back down to this 115 level. I thought we were going to get a nice little pop-up, but let's take a look at BTC first. And 12 hours. So my thoughts for the next few days were the following. Is this ghost feed? This is what I thought we would do. Maybe a little bit steeper. Let's get the ghost feed. So I thought that we were going to have like a little pop. Some more barding. Maybe come back down again. More barding. And then just up in this channel. Right? That would make sense. The problem is that I mean, who would want to short at these levels? It's just really difficult here when you think about it. Because let me make some short positions. Okay, let's say we take a short and we wait for it to come back up. And we get a nice entry here. Okay. We want to retest the lows. So 445 points, but in order to be safe about it, your stops are going to have to be very high here. At a minimum, it has to be above the 21 EMA a little bit, a few percent, like 1% above the 21 EMA. So like a 4% there. In reality, you probably want to have it higher because let's take a look at the ATR. Gonna get rid of some of my, let's get rid of vol, let's get a VPR, and let's pull up ATR. So ATR is average true range, not 8, ATR, average true range. Average true range is a very good indicator. Outside of knowing the daily volatility, average true range gives you a rough estimate of where, of how much BTC is going to move in a day. And I can't actually see this. There we go. So 183, let's say it's roughly $200 right now. Roughly $200. So that's like a 1 standard deviation move. It's about $200 a day. And that's on both sides, I think, as well too. So let's go back down. And so in a 1 day period, we have a $200 movement. Oh, go away. So at least we have to be $200, roughly, right? Which is 5%. But then you need to have a bit more than that as well too. So put another, take it up to $300, right? Just to be safe. So there you're looking at your stops, which would need to be about 8.4% out, 8.5% out. And if you're targeting the lows, your risk to reward here is only about 1.5 for your R, which isn't that great. I don't really like it. It's not great here when you think about the trade and about the stops that you would need to put on here. You know, you could even put the stops even at 10%, right? Even for a little bit more safety. But that's not that great, right? Now it's almost like a 1-to-1 trade where, you know, you have enough room with your stops based on the current volatility and current ATR. Same thing goes for ETH as well too. We can do this for ETH. Let's say we want to wait, be patient, get a short 117, like 117. What is it? 117, right? Let's look at ATR just to get a rough estimate of how much everything's moving. It's like $10 at least for ETH. So minimum, and we need to be above the 21 EMA. So it's roughly at the 21 EMA is where the $10 is. And then we probably need to go another, I don't know, $5 after that, just to be safe. Yeah, there you go. So 13%. And with this, you'd want to test the lows. So 2.3%. It's 2.3 R. It's okay. Still not the best. So, I mean, possibly shorting Ethereum here would be decent, but I don't know. Let's go back to that. I don't know. It just doesn't look, it's not something that I would be interested in. I think it's better to be more patient waiting for longs, or at least waiting for a short that happens at the top of a at the top of a long move, right? So this was a nice short up here at 157, and yeah, so it becomes more and more difficult to short just because if you think of your short as starting up here, right? You've already taken 50% here, and you know, how much more can you have, right? If you take it to the top, so you shorted up here, so you've already taken 30%, you got 50% here, down move, and now you're just waiting for the other 50. So not the best risk reward, unfortunately. Same thing for BTC. So really, again, holding pattern is what's happening in my mind until there's some sort of break. You know, we can look at the 1 hour. I thought yesterday we were going to have some more significant upside movement because we broke through. Usually, and again, another big factor that kind of has warned me off, even though the short looks appealing, when you see movements like this, where you have a $150 candle in the course of, I don't know, what was it, like 25 minutes? When this happens in the course of, what is that, 10 minutes, 15 minutes, that's a very good indication. And same thing here as well too. You're starting to see these people try to take the price down, but there's big bids waiting to suck up everything and just push the price back up. It's very indicative that there's someone there who would like to see the price, or who it's attractive at that price to buy. And you know, the volume there is actually quite large. So yeah. Well, I think that's gonna wrap it up. I don't really want to get. I don't think there's. No. What did I do that for? Okay, let's take a look at some alts, just to see what is pumping today. Not much. GPT, Nano, interesting. That's interesting. DRX pumping today. That's a really nice break on the 12-hour as well too. Very nice. Very nice. Yeah, maybe it's time to start trading alts now that we've bottomed out. Starting to get across, like MFT mainframe, getting across on this. Yeah, interesting. I mean, the GBT is too small of a coin. I mean, the biggest one that I would see would be Nano. Finally crossing its 21 EMA. Right, so the last thing that I want to talk about today is the BIS report that came out about proof of work. So the BIS working paper, let's make this full screen actually, if we can. All right, BIS working paper, number 75765, Beyond the Doomsday Economics of Proof of Work in Currencies. And why is this on QuickBooks? Okay. So I would recommend to everyone to go and read this. Rather interesting stuff about proof of work. It does a very good job of describing how proof of work works, what's known as economic payment finality. That is when a payment can be considered final only once it's unprofitable for any potential advisory to undo it with a double spend attack. For anyone who doesn't know, a double spend attack is when it doesn't really affect normal people who actually hold coins, right? It's more of an issue for exchanges and other people who transact in more of a financial layer. So a user comes along, they hire enough hash power to create both a transaction that says C, here it's C. So C sends 1 Bitcoin to A, and C sends 1 Bitcoin to B. So you can have double spend where you send a bunch of, say, shitcoins to an exchange. Once they hit the exchange, you then dump them on the exchange, get BTC, and then take the BTC off. And then the exchange is left with the double spend and has to figure out how to suffer the losses of those coins. What I found interesting in this BIS report, and I'm going to zoom out a bit, come down, is that they talk about as proof of work moves towards, as Bitcoin starts to halve and eventually goes down towards 1 Satoshi, the rewards for providing proof of work will diminish to the point where it will no longer be financially beneficial for the miners to process the proof of work anymore, process transactions anymore. Additionally, they also go into limitations of the 1 megabyte block to provide for high transactions, or a high number of transactions, which is interesting as well. They also talk some mad shit about Lightning Network. So the Lightning Network, there we go. It is unclear, however, whether second layer solutions can themselves scale, whether they will be restricted to serving small subnetworks of users or scale to a network that, by the law of 6 degrees of separation, connects everyone with everything else. These are two sets of key concerns. The first is of a technical nature and beyond the scope of this paper. It relates to what is required to deter potential attacks on the specific architecture and whether all participants need to be online for on-time payments to be routable. So I thought there was very extreme bias in what these people thought. They don't like Bitcoin. They don't like cryptocurrencies. Let me read you the conclusion. The overall conclusion from this paper is that, at least judging on current technologies in the digital age too, good money is likely to remain a social construct rather than a purely technological one. This is the Bank of International Settlements, so they're pushing their own agenda here. The efficiency of decentralized exchange via proof of work exclusively is much lower than would appear at first sight. Alternative technologies still need to demonstrate that they can function without institutional backing. But claiming that technology alone cannot do the trick is not to say that it is useless. It simply means that the focus could shift away from the issue of whether the technology can replace traditional sovereign money and financial institutions. One key question for future research is whether and how technology-supported distributed exchange can complement and improve upon existing monetary and financial infrastructure. For example, in mixed systems, normal market functioning could be guaranteed by decentralized economic consensus, yet should it fail, there would be an overarching coordination mechanisms that are also tied to the legal system. What would be the gains regarding efficiency, transparency, and resilience from such semi-decentralized exchange compared to current market designs? Outside the world of cryptocurrencies, afficandos answering these and related questions will require a more distributed understanding of the new technology and how it might be used in existing markets. So what the BIS is pushing here is they want some sort of semi-decentralized proof-of-stake coin, because in the previous section, which we can go up to, they talk about proof of stake, gambling or institutionalizing the truth, and they talk about the nothing at stake problem as one of the issues. But then when they come to the end, they say that institutional backing could improve the efficiency of cryptocurrencies and also bring down the possibilities of any double spend attacks. So this is classic corporatist shilling for certain types of systems, and that the Bank of International Settlements believes that the only way to have a functioning cryptocurrency across global lines is to have either a government fiat-sponsored cryptocurrency, or not fiat, but government, or essentially it is fiat because it's by decree, some sort of government fiat cryptocurrency where they're able to undo any double spend attacks if they happen. It's also proof of stake as well too. And the majority of the stakeholders would be institutions who would be able to control the blockchain. So I don't know, maybe this looks like EOS with their delegated proof of stake or something else. But the governance role the BIS thinks should take the form of institutions and governments providing that safety and security. But again, that contradicts the whole point of what Bitcoin was trying to do originally, which was to get rid of the preponderance and the strengths and the power of these institutions and distribute it among the miners and then also the holders of the currency itself. So yes, please read the report. I'll list it in the show notes. It's really good. I mean, there's a lot of thought put into it. I just don't agree with their conclusion. Some very valid points about what's happening with proof of work all proof of work chains, and also some shilling for some proof of stake. So it's going to wrap it up for me today. I will be back tomorrow, and if you like what I'm doing, subscribe, leave a review, and see you tomorrow.